Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is Monday, February 13th. Tomorrow is Valentine's Day, so if you haven't got your significant other a present yet, you better run out and get it, even if it's just flowers from your local grocery store. All right. Now today, a lot of green in the market, but I did have a request from one of the subscribers to the channel to cover Nintendo. So we are going to take a look at Nintendo today. Let's jump right in the video. So I did not pull this from their homepage, but their homepage is www.nintendo.com. So modern day Nintendo, right? They provide gaming services, gaming consoles. I think they even have an online gaming presence. So they're video game manufacturer, but they got their start back in 1889, early history to 1972. Nintendo was founded as Nintendo Karuta on September 23rd, 1889. I did not know this. I did not realize it had been around that long. I'm not going to try to butcher this gentleman's name here, but they were founded in Japan. And so they grew from a card shop, right? Original Nintendo headquarters, 1889 to 1930, and workshop. And again, I'm not going to try to pronounce that there in 1889. So that's their first shop, and this is their card games. So again, I did not know that. I was not aware of it. Very interesting. If you wanted to read the rest of this, I actually pulled this from Wikipedia. When I went to their homepage, it's really a lot in line with the games, the consoles, that sort of thing. So if you're looking to maybe get some Nintendo games for your kids or yourself, that would be where you could do it. But again, this information here is actually from Wikipedia. Now we are talking about Nintendo, ticker NTDOY. They were down 1.59% on the day, so this is why we're looking at them. I often like to look at companies that are down on the day or nearing their 52-week lows so that I can see if we can find value and if it makes sense to add these to your watch list or potentially add them to your portfolio. Again, this one closed at $9.91, so down 1.59%, February 13th. 52-week range as low as $9.76, as high as $13.65, so definitely closer to that 52-week low. Average volume 1 million. Today was 1.1. Looks like pretty even on the day. Market cap of 46.271 billion. A beta of 0.36. Very low volatility on this one, right? Beta means the volatility of the market. 1 being the market. Anything less than 1 is lower volatility than the market. Anything over 1 is more volatile than the market. PE ratio pretty low at 11.39. Price to earnings ratio there is $11.39. Earnings per share, EPS is at 0.87, so 87 cents per share in your earnings. Earnings date, the next one is not listed here, so you would need to do some research to find that out. If you're interested in this company, I would always recommend you do more research, go into their statistics, go into their financials, see if their revenue is growing over time, make sure their debt is not growing, or at least they have enough to cover the debt. You always want more revenue than debt, and growing revenue, free cash flow to be growing, margins pretty good. I did take a quick look at this. You'll see here in a minute I pulled some historic or statistics off another page to kind of compare because some of the information was lacking. So you'll see that here in a moment. So where were we? 37 cents is the dividend. They are a semi-annual payer. You'll see that here in a moment as well. So they pay out a couple times a year. So that's 37 cents. I believe that is divided up by 2. And they have a pretty nice yield at 3.71%, which is actually higher than their typical yield. You'll see that here in a moment as well. Ex-dividend date, their last one was September 29, 2022. I believe they've already paid out, so you would be in line for their next dividend if you bought them now. And you want to always buy at least a day before the ex-dividend date for any stock that pays out dividends. And 1-year target, at least according to Yahoo Finance, where I pulled this information, they have a 1-year target of $71 per share, which would be an extreme return on investment here if it happened to hit that 71. This is not really in line with what other estimates are, so we'll see that here in a moment. And I always recommend more than one source for information so that you can verify information just like this. This seems pretty high for an estimate, right? Being at 991. And their 52-week range over the last year, they've only hit 1365. So that seems pretty aggressive, but you never know. And as I stated, I always recommend more than one source. So another source I like is stockanalysis.com. That's where I pulled this information. You don't have to use Yahoo Finance. You don't have to use stockanalysis.com. There's lots of other sources out there. I know Google has a source, Seeking Alpha. There's dozens of sources out there. Another one I've been looking at is Fast Graphs. I think I might actually sign up for the Fast Graphs product there if they'll let me use it in these videos. I'm going to reach out to them and see if that's a possibility, and I may add Fast Graphs to this particular series as a quick reference guide to whether or not they're in line with the market value or overvalued or undervalued. But anyways, according to the 25 stock analysts from stockanalysis.com that are taking a look at this, they call it a consensus buy. They have a low estimate of $4.64, which would be a 55.60% decline from where it currently sits. They have an average estimate of $12.77, which would be a 22.20% increase from where it currently sits. And they have a high estimate of $17.30, which would be a 65.55% increase. So none of these analysts see it going up to the $71 we saw in Yahoo Finance. So I would consider that probably outside the realm of realistic possibilities. But again, you never know. Maybe some person over there knows something we don't know, or these 25 stock analysts don't know. Now here's where I would typically show you my position in the company. I do not own a position in Nintendo. It does seem to be undervalued, and I say that again. I pulled this information from Yahoo Finance. Excuse me. And here is one way you can kind of get a quick gauge of whether or not a company that pays dividends is undervalued. And I go and look at the 5-year dividend yield. Right, it's currently at 2.7%. The current forward yield is 3.71%. So that would tell me it's undervalued. If the 5-year average is lower than the current yield or the forward-looking yield, it's undervalued. And if the 5-year average is higher than the forward or the current yield, it would be overvalued. So that's a quick way to look at it. They call that dividend yield theory. Right, one more time. Dividend yield theory says to look at the current average yield, let's say 5 years. This is a 5-year timeline, but you could look at 10 years if you wanted. The 5-year dividend yield average of 2.7%, and if the dividend yield currently is higher, which is 3.71, then it is undervalued. And if the yield would be lower than the 5-year average, it would be overvalued, right? Payout ratio is 42.15%. This is another one over here. The payout ratio from stockanalysis.com didn't show up, so that's another reason I pulled this information. I wanted to try to give you as accurate of information as I could. Again, you would want to verify this by maybe one more source. Since one is not showing it, one is. Maybe pull up one more source and see if they're in agreement with this 42.15% payout. Again, the board annual dividend is 37 cents. And I believe this is in Japanese yuan, I believe is the Japanese currency. So they are showing it paid out in Japanese yuan, but the payout is March and September. So it is semi-annual payer in March and September for you, so twice a year. And it does have slight dividend growth, but not extreme, right? Real low growth, 0.49%. So it's one to look at maybe if you are interested in something in the gaming space. Again, I'm not particularly interested in this stock. I prefer something that pays more than semi-annually, unless it has a higher dividend yield for me. And at 3.71%, even though it's over its 5-year, which speaks to undervaluation. So this does look undervalued, right? If you're looking for something undervalued and cheap, under $10 per share, you could load up on 100, 200 shares pretty cheaply. This might be one to do it. You'll get a 3.71% yield. You will get slow growth, but some growth, and maybe they increase the growth in the future. But for me, if I'm getting something under 4% yield, I want more growth. That's just my personal opinion. Not saying this is a bad stock, not saying it's a good stock, just my personal opinion there. All right, so that is Nintendo. Really appreciate the suggestion. And for those of you who have other suggestions, go ahead and put it down there in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Join me on this journey to financial freedom. Hopefully you are on your own journey as well. And if you have not started your own journey to financial freedom, there is a Webull link down below. If you sign up in Webull and deposit some money into there, you'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. You do not have to use my link. You don't have to use Webull. You can use any brokerage account. I actually use Ally for my main brokerage account, and I do In my Webull account, I actually do a little bit more speculative plays that I don't cover on this channel. And I would recommend also, if you do different types of investing, like if you're a dividend growth investor, but you also like to buy growth stocks, I would try to do that in separate brokerage accounts so that you can keep them separated and not confuse the two. This one's for dividends, this one's for growth, or maybe you buy options. This one's for options, this one's for just dividend long-term holds, right? Just a recommendation. That's how I do it. And then I take a lot of the profits from the growth side and shift them over to the dividend, long-term dividend hold side, right? All right. And as I said, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and drop it all down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing during for educational and entertainment purposes. Investing involves risks. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.